Volkswagen has announced its intention to float luxury car brand Porsche. It could become the largest IPO in German history.
Porsche aiming for a valuation up to $84 billion. That would equal the entire market cap of Volkswagen, twice the market cap of Ferrari. Now, the bull case here is that Porsche, like Ferrari, is really a luxury brand and should get a luxury multiple. Porsche projecting sales of up to $39 billion this year, margins of over 25%. That is massive in the car world. Makes about 300,000 cars a year. Profits were up 22% just in the first half.
In this video, Volkswagen is showing legacy automotive manufacturers the path forward. Spin out your most valuable assets for an IPO, raise billions of dollars, spend that money trying to survive the transition to EVs, and probably go bankrupt anyway. And before we get into it, if you want to instantly unlock over 100 exclusive videos, plus my 10-year Tesla stock price targets and loads of other perks, including optional access to my Tesla valuation model, join our growing community of thousands of supporters on Patreon with the link in the pinned comment. You can also pick up some Tesla, Elon, and investment-themed merch in the merch store. First, we'll look at a few quick clips in the mainstream finance media discussing this proposed IPO. I'll share a few thoughts and comments along the way. Then we have a new update.
Porsche aiming for a valuation up to $84 billion. That would equal the entire market cap of Volkswagen.
Now, this is worth discussing, so let's do exactly that. Just imagine a scenario in which you, as a company, can spin off something, one of your internal assets, which alone could be worth more than the entire company from which it came. At first glance, you might think, how the fuck does that make sense? Well, here's the reason. Volkswagen is what's technically known as an absolute clusterfuck of a company. Management structure is an absolute nightmare, ownership structure, absolute nightmare, but in addition, the company is encumbered by its internal combustion engine vehicle business, which is not an asset of any value. In fact, it's an asset with negative value, as we know. The ICE vehicle is dead. The horse and carriage equivalent is going away. This is like being on board a ship which has sprung multiple holes, water flooding into the hull. If you want to survive, the first thing you should do is throw the dead weight overboard. That is exactly what we're seeing here. And this is something I've discussed in the past. My personal belief is that the best shot for legacy automotive manufacturers to survive the transition to electric vehicles, which I still think is extremely unlikely, they're years behind, is to spin out their EV business. Now, in the case of Volkswagen and the Porsche IPO, this isn't exactly what's happening, but it's a great proxy for what I believe is the best path forward. Investors, at least some of them, understand that the ICE vehicle is going the way of the dinosaurs. Not everyone gets this yet, especially many of the dullards in the mainstream finance media and a lot of Wall Street stock analysts covering the automotive industry. You know the types, Tesla's valuation is more than the entire... Those people, no fucking idea what they're talking about. But some do, and I think we're seeing a taste of what many other legacy automotive manufacturers will do in the future. Create your EV company within your own organization, with the intent in the future to spin it off, capitalize on the excitement and the buzz from investors around EVs, IPO that separately as its own entity, raise a ton of capital, with the ultimate expectation that the company from which it came will ultimately end up bankrupt. I think this is the way things play out. When push comes to shove, when you're fighting for your very survival, anything that's holding you back, slowing you down, anything that will encumber your progress, whatsoever, needs to fucking go.
Twice the market cap of Ferrari. Now, the bull case here is that Porsche, like Ferrari, is really a luxury brand and should get a luxury multiple. Porsche projecting sales of up to $39 billion this year, margins of over 25%. That is massive in the car world. Makes about 300,000 cars a year. Profits were up 22% just in the first half. Now, several big investors like the Qatar Investment Authority already pledging to buy big blocks of stock, so that bodes well for demand. But there are governance concerns. It's a complicated ownership structure with the Porsche family keeping voting control through a special class of shares. Public investors will get non-voting shares.
Red flag of the century. Of course, I think most people interested in the Porsche IPO won't even understand what voting rights are for shareholders, so probably a non-issue. But imagine owning shares in a company in which you have zero say at all as a shareholder. Somebody who owns part of the company, it's your company too. You literally have shares of the company. You own part of it, yet you can't have any say in how it operates. Don't get to vote on anything.
On top of that, the CEO of Volkswagen, Oliver Blume, he's going to remain the CEO of Porsche.
Looks like yet another red flag.
Many shareholders opposing those dual roles. You got recession fears, the energy crisis in Europe, Porsche's big switch to EVs. Also, all those questions hanging over the stock. Now, Ferrari was seen as the model here. That stuck up 3.5 times since it went public in 2015, but Ferrari struggling so far this year, down 26%.
How much is this an issue with the Porsche family, and what is the sales mix between cars and like the Macan? I call it an SUV, but it's just a car. It's jacked up, really.
Yeah, exactly. Well, their switch to EVs has been successful, although early. Right now, EVs, the Taycan makes up about 18% of sales. They hope that it will account for 50% of sales in the next 3 years. The Macan goes electric in about 2 years. So, they've got a good road ahead of them.
Now, this is a great point. Porsche seems much further along in terms of the EV transition than Volkswagen as a company. The Porsche Taycan was a great first attempt, almost instantly becoming Porsche's best-selling vehicle model. That's right, the very first EV Porsche makes. Instantly best-selling vehicle. We just heard around 18% of sales coming from the Porsche Taycan. So already about 1/5 of the company's vehicle sales electric. This should already be 100%, but hey, at least they're making progress, especially compared to most of the world's legacy automotive manufacturers. Long story short, Porsche appears to be in the best position as its own entity to actually survive the transition to EVs. Throwing Porsche overboard into a lifeboat instead of remaining on the Titanic is probably the play. And just between you and I actually think it's possible over the long term. The Porsche brand may actually go to a mainstream vehicle, at least that may be the low-key underlying, not publicly stated goal and intent. Start at the high end, get your technology right, drive your costs down, blah, blah, blah. You guys have heard the spiel. Exactly what Tesla did. At this point in time, literally nobody on earth would argue. Porsche is a luxury brand. That's their bread and butter. Most people buying a Porsche vehicle, deep insecurities, vertically challenged, micropenal, overweight, whatever. And I'm not saying this is all Porsche owners, but quite a few of them. It would be a big risk in terms of the brand, but VW ends up going bankrupt. Who's going to be there to fill the void? Now, I know there's many offended Porsche owners right now, and as soon as they're finished doing their daily jelking exercises, which is something I heard about recently. Shout out to Derek Moore Plates. It's a long fucking story, but this is actually a real thing. Anyway, the point that I'm making here is I'm not saying everyone who owns a Porsche is insecure. However, I am saying that most are. Yes, I do mean that. Oh, it's a beautiful piece of engineering. Oh, it's a marvel. I love how it hums. Oh, the perfect. Okay, I get it. You're the exception to the rule. I totally understand that. The point that I'm making is that if Porsche can separate itself from Volkswagen, IPO, transition to fully electric for Volkswagen, start to capitalize on this insane demand for EVs, including for people who are trying to compensate for insecurities and people who just really like the way that a Porsche looks and performs. I just care about the technology, cool piece of engineering. I get that. They might have an opportunity to go downstream to more mass market vehicles. I know this is a crazy idea, especially given the perception that Porsche is a luxury brand. But as I said, if VW goes down, who's going to fill the void?
But it's still a lot of unknowns in terms of the investments. And right now, SUVs are more than half of their sales. So that's going to be a huge shift for them and for the investors in this company.
Taycan, people I know love it. Charges fast, looks great. All you got to do is have like $130,000 and you can get one. Robert Frank.
Yeah, exactly.
That's it. Robert, thank you very much.
Volkswagen has announced its intention to float luxury car brand Porsche. It could become the largest IPO in German history.
ASOS, so there's some kind of like relief that this is going to happen. There was some concern because of market conditions that the IPO would be delayed, but Porsche, as I said, following that intention to float their IPO here, it's going to probably happen in September or early October. They're going to float around 25% of the company in this preferred non-voting share class. This allows the Porsche and Piech families to maintain control of the company going forward. Reuters says that Porsche is seeking a valuation of $60 to $85 billion. Like I said, would make it Germany's biggest IPO ever. Porsche is a moneymaker for Volkswagen, right? It's operating profits up 22% year versus a year ago. Very high margins there. They're doing quite well for VW. And this money, where is it going to go? It's going to go to actually be trying to transform the brand to introduce more EVs as it goes fully electric. So, Porsche wants 80% of those sales to be EVs by 2030. So they have a long way to go, but also need a lot of money to make that transformation happen.
So credit where it's due. 80% of all Porsche vehicles being fully electric by 2030 is one of the more aggressive goals from a legacy automotive manufacturer. It's still way too slow. They haven't quite figured this out yet. Needed to be 100% yesterday. Next best would be 100% tomorrow. I mean, if you're really pushing it, 100% by 25, 26, maybe 27 at the absolute latest. Not 80%, 100%. But this once again speaks to the aggressiveness of Porsche's goals versus other legacy automotive companies. VW can't move this fast. I've predicted this in the past, and I'm going to keep saying it until it plays out. Companies like Volkswagen are going to see their automotive sales volumes collapse from 10, 11-ish million vehicles per year at peak volumes historically to a fraction of those, as they realize people aren't buying our ICE vehicles. Even though we plan to still be making them in 2030, if no one's buying our ICE vehicles, even if we plan to still be making them in a few years' time, well, we can't sell them, therefore they're not going to make up any of our unit volume. VW sales over time, like this, steady state, big collapse, slight rebound, in my opinion.
And so when we look at that transformation, what does it look like? What is Porsche doing when it comes to electric vehicles?
So the Taycan EV has been a pretty big hit for the brand so far. It's actually outselling the 911, believe it or not, as of right now. So they've been doing quite well with that Taycan, but they really need to go into the crossover and SUV space, and that's what the Macan EV will be addressing that market. That's their number one seller too, is the Macan EV. So they need to get that out. 2025-ish is the deadline. There's been some concern because of problems with software. This is why VW's outgoing CEO Herman Dice lost his job, because they had problems with the EV software. And then Porsche CEO Oliver Blume was tapped to become the new CEO because he's going to try to fix that, right that ship with regards to the EV software. So the whole brand, as well as VW portfolio, can actually go electric too.
And now for the latest update. Volkswagen seeks to raise $9.4 billion in Porsche IPO. Carmaker confirms 4 cornerstone investors for listing. Share sale could be Europe's largest listing in a decade. So Volkswagen is looking to raise as much as 9.4 billion euros, close to 9.4 billion US dollars, from the initial public offering of its iconic sports car maker Porsche in what could be Europe's largest listing in more than a decade. This is serious business. The German car maker said late Sunday it is seeking a valuation of 70 billion to 75 billion euros for the listing, below an earlier top-end goal of as much as 85 billion euros, with the deal going ahead at a time of deep market upheaval. European markets have been largely shut to IPOs for most of the year, with companies shying away from seeking new listings because of the region's energy crisis, rising interest rates, and record inflation. So these are all fair points. The timing isn't perfect, but it just goes to show their hand is being forced. That being said, this is an emergency. As I said, back to the analogy of a sinking ship. There's never going to be a perfect time to do this IPO. Yesterday was the perfect time. Amid the stock market slump, the plan to list is getting a boost from firm commitments of key cornerstone investors. The Qatar Investment Authority, Norway's Sovereign Wealth Fund, T. Rowe Price, and ADQ are set to subscribe to preferred shares of as much as 3.7 billion euros, the manufacturer said. That accounts for almost half of the entire IPO. Porsche isn't alone in scaling back valuation targets, with Intel Corp lowering expectations for its Mobileye IPO. Quote, "We are now in the home stretch with the IPO plans for Porsche and welcome the commitment of our cornerstone investors," VW's chief financial officer said. The offer period will start on September 20th, hours away, with a planned trading start for September 29th. Aside from offering investors a slice of one of the most recognizable names in car making, the IPO will hand back significant decision-making power to the Porsche Peach family, who lost control of the sports car maker more than a decade ago after a protracted takeover battle with VW. And here we get to learn a little bit more about the ownership clusterfuck. To account for the interests of the billionaire family, who hold 53% of VW's voting shares. By the way, let that one sink in. One of the tiny sub-brands within VW. The owners with major interest in that brand control more than half of the entire company, VW itself. Is it any wonder it's hard for them to get anything done? Investors will be able to subscribe to 25% of Porsche preferred shares, which carry no voting rights. The family will buy 25% plus one of Porsche's common shares with voting rights, meaning they will receive a minority blocking stake and sway on future key decisions. Just imagine having a single dinosaur there that doesn't want to fully transition to EVs, delaying progress. The family has agreed to pay a 7.5% premium on top of the price range for the preferred shares and plan to fund the acquisition with a mix of debt capital of as much as 7.9 billion euros and a special dividend paid out by VW. If you guys want to pause this video and look at the absolute nightmare in terms of ownership structure here, go for your life. I'm going to skip ahead. This is a joke. Proceeds from the deal will help VW with financing its electric vehicle transition and investments in software, the car maker says. While interest for the IPO has been high, some investors have said the appointment of Oliver Blume, Porsche's chief executive, to the helm of VW and the plan for him to stay on in a dual role raises questions about Porsche's future independence. Certainly does. So I thought this was very important to cover for a few reasons. First, it does give an insight into some of the potential ways that other legacy automotive manufacturers can attempt to survive the EV transition. Make some progress towards EVs with one of your brands. Start developing assets and technologies from that brand. Know full well that the company itself is likely to go bankrupt and spin out that entity. IPO that entity. You may even get a valuation for that entity alone, even though it's a fraction of what you're doing in your entire company. That is more than the entire company from which it's coming in the first place. I know it sounds bizarre, but going back to the analogy of the sinking ship, these legacy automotive manufacturers can spin out an EV-only entity, pure EVs. It's not encumbered by ICE technology. Not only will investors value this company very differently and a lot more generously versus an ICE vehicle manufacturer, it will have a much better chance of surviving the decade. Then, of course, you can use that IPO of your EV-only entity to raise capital to attempt to transition your dinosaur to EVs. And hey, look, if it goes bankrupt, well, hey, not our fault. We tried our best. And at least we've somehow managed to survive, kind of, through our offspring, aka our EV-only IPO. So it'll be fascinating to pay attention to what happens with the Porsche IPO. Does the stock price tank? Does it explode? Does it go up, down? Is it very violent and volatile? And where does the valuation ultimately end? In addition, I really do think this will be a leading indicator for other legacy automotive manufacturers. Their best chance, which will still be a massive uphill battle, of surviving the transition to EVs is, in my opinion, without question, spin off an EV-only business. All in on EVs. Raise capital, capitalize on the bell curve and dumbass investors who think that production is easy. Oh, okay, yeah, sure, here's a $100 billion valuation for your company, no problems. Take advantage while you can, raise capital while you can, and let the Titanic sink in the background. I'd love to know what everybody watching thinks. Is this the move? Is this a smart decision from VW? Is it a smart decision from Porsche? Will other legacy automotive manufacturers follow suit and in some form or another spin out their own EV-only entity? And I know Porsche isn't pure EVs yet, but they've made the most progress of all brands within the VW group. And their first EV wasn't a steaming pile of excrement. And just a quick heads up, submissions are currently open for the latest exclusive Q&A on Patreon. Still haven't been cancelled yet. Touch wood. So if you're a member on Patreon, you want to get your question in, now's the time because submissions won't be open for too much longer. See you over on Patreon. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. Hey guys, thanks for watching. If you want to support the channel and instantly unlock over 100 exclusive videos, plus my 10-year Tesla stock price targets and loads of other perks, including optional access to my Tesla valuation model, join our growing community of thousands of supporters on Patreon with the link in the pinned comment. You can also pick up some Tesla, Elon, and investment-themed merch in the merch store. And if you're still watching, you're awesome. Please let me know your thoughts on today's video in the comments below, and click the card on screen now to watch the next video.